The company's second quarter results missed expectations. That's the first time in 5 years that Disney's earnings have disappointed. Films like Star Wars: The Force Awakens and Zootopia did boost the studio division by 22%, but growth in its media networks and parks and resorts falling short of estimates. Disney said it earned $2.1 billion, or $1.30 a share in the quarter, compared with $1.23 a share the same time last year. Now, revenue did crop up to $13 billion from $12.5 billion a year ago. Sales from media networks were flat, while cable network sales fell 2% as more people opt to cut cable. And revenue from Disney's parks and resorts businesses was up 4%, but attendance at Disney's theme parks was flat. The strong dollar also a big factor here. And Disney is no longer in the video gaming business. It is closing Infinity, that's its self-published console games business. And the happiest place on earth, and not so happy for investors today, shares have been tanking after hours, down almost 5.5%. Well, Disney is hoping that its latest venture in China is going to be a big moneymaker as it prepares to open its newest theme park, Shanghai Disneyland, next month. The $5.5 billion, 963-acre park is the first on the Chinese mainland and Disney's 6th worldwide. It's expected to attract 15 million visitors a year to start, and the company hopes that that number will eventually hit 330 million guests a year. And the housing market is already feeling the Disney magic. Home prices in Shanghai for new projects near the park have surged as much as 35%. Well, one of Disney's biggest backers is Chinese President Xi Jinping, who has repeatedly applauded Disney's efforts in China. She met with Disney CEO Robert Iger last week in Beijing. Let's get more on Disney with Robert Niles, editor of themeparkinsider.com. Robert, good to see you. Thanks for joining us.
Thanks for having me.
So, Robert, Disney's second quarter earnings missing estimates and disappointing investors for the first time in 5 years. What's your take?
Really, it comes down to the softness in the media networks. It's been challenging for ESPN. People think of Disney as a movie company, but really in recent years, it's been ESPN that's been driving revenue at the company. And with so many cable subscribers switching to streaming services and cutting the cord, if you will, it's been challenging for Disney to make up that revenue in other areas of its operations.
Yeah, cord cutting definitely a big problem. Then our revenue from parks and resorts was up 4%, but attendance at Disney's parks was flat. Now, were you surprised that we didn't see an increase in number of visitors there? I know that terrorism concerns have meant that tighter security measures have been implemented, like metal detectors at resorts. Is that a big factor in attendance?
I think the disappointment in the parks and resorts areas really was the surprise in this recent quarterly report, seeing the year-over-year attendance decline at the Walt Disney World Resort in Florida, which is the world's largest theme park resort. I don't think many analysts expected that. There was an increase at Disneyland in California, but that was offset by the weakness at Disney World. And I think you have to look at the strong U.S. dollar as the main culprit there, holding down international visitation. Surely the hassle of visiting the United States, given security concerns, is an ongoing issue for promoting travel into the United States of America. But the dollar, I think, is the real culprit at this point, not allowing people to get the same value that they might get visiting other destinations. And Disney's also facing increased competition from the Universal Orlando Resort for those people who do make it to Florida.
Right, a lot of competition on that front. Shanghai Disney, scheduled to open on June 6th. What are your expectations there, Robert?
Well, the first previews of the land began this weekend, and people online are absolutely giddy, I would say, about some of the images and the videos that we've been seeing from those first invited guests into Shanghai Disneyland. A lot of people didn't know what to expect with this park because Disney was moving away from its traditional plans for these so-called Magic Kingdom parks that we see in Florida and California, Paris and Tokyo and Hong Kong. The Shanghai Disneyland Park is something unlike anything else Disney's done before, a completely new design intended to appeal to the Chinese audience in a way that differentiates itself from what it's done for international visitors in the past. But the initial images that we're seeing have just been stunning, and I think a lot of fans around the world are looking upon this very favorably with high expectations for the performance for Shanghai Disneyland.
Well, Robert, you mentioned that it will be different. How will Shanghai Disney be customized for China? And will there be a major difference between Hong Kong Disney and Shanghai Disney?
Yeah, well, Hong Kong Disneyland was very much the same model as the original Disneyland in Anaheim, California. You enter with that replication of a main street from turn of the century America, turn of the 20th century America. But in Shanghai, Disney's going in a different direction. Instead of giving us that American Main Street entrance, they're going with something more along the lines of a traditional Chinese garden, something that's really meant to appeal to multi-generational visitors, not just young parents with children, but multi-generations of the same family coming to the park together. So they're really trying to appeal to traditional Chinese culture while at the same time taking a new track with some rides, going with higher tech, redesigned experiences that also appeal to the Chinese market desire for cutting-edge technology.
Right, well, we know that China is a very important market for Disney. President Xi Jinping met with Disney's CEO Bob Iger last week. Now, it's considered very rare for President Xi to meet with foreign leaders, especially business leaders and in public. So how significant would you say this meeting was?
Very significant. Meetings between presidents of countries and CEOs of major corporations, typically any type of contact between corporations and governments happen at a much lower level than that. So the fact that we saw both the president and the CEO meeting together really speaks to the high level of importance that both China and Disney ascribe to cultivating this relationship.
Well, Robert, China's rules on film imports, quotas, and local distribution come up for review in February. Is this a possible challenge for Disney? What do we expect from Disney on that front?
Absolutely. Disney would love to have greater access to the Chinese market. It's the world's most quickest growing economy. It's a very strong middle class, strong appetite for entertainment. That's why Disney's making this huge capital investment in Shanghai Disneyland. And it would love to have the opportunity to bring more of its film recorded entertainment, including streaming entertainment, into the Chinese marketplace. So I know that it's a priority for Disney to try and negotiate more access into the Chinese marketplace.
All right, I'm long overdue a visit to Disneyland myself. Thank you so much, Robert Niles, editor of ThemeParkInsider.com.
If you like what you just saw, follow us on social media and visit our website, cctv-america.com.